The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome to a beautiful March 14th. It is Happy Pie Day, and I'm not talking about apple pie or cherry pie or black bottom pie, but I'm talking about pi. 3.1415926538979323. So say that with me once real quickly. 3.14159265358979323. 323848264. You know, I think maybe I'll just do the entire show because it goes to over 10 billion digits, and we could just have a great day out here. But what do you say? Anyway, a number that basically has every number ever in it because it goes on to infinity. But the way to figure out how much room's in a circle. And one of those magic numbers that has magical properties. But at the heart of our existence, there is a number that explains just about everything, and pi is one of those. At least all the things that you need to know. But it is wonderful. And if you like a little bit of mathematics, most people sneer at mathematics and science because it makes their head hurt. It makes my head hurt, too. I play through the pain, just like they say in the football guys. I play through that pain. Anyway, wonderful day for another edition of the Power Trading Hour with me, your lovable and humble host, and also very squeezably soft David White, as always, at the headquarters of Technical Trading and Investing. And, of course, think a little bit more about mathematics on a day like this. One of the reasons it's kind of neat is that physicists also have finally come out and said that they found the Higgs boson. 2 weeks where, I actually put the wrong title underneath that. The Higgs boson is what gives matter its mass. And mass is not the same thing as gravity. But mass is kind of equitable to weight. When you actually look at it and what these guys are going after, some people call it the God particle, horribly misnamed, kind of like chaos theory is horribly misnamed. It is, the Higgs boson is a particle that gives weight to something. And what you find out is that the size of particles is almost all the same. Whether you're talking about helium or gold, you find out that this Higgs boson, a small particle, actually gives out a field that permeates just about everything, kind of like that Star Wars thing, you know, the Force. It permeates everything throughout us. That was kind of a takeoff of some of the early discussions about what the Higgs boson was. But there's some things that have almost no weight. There's some things that have huge weight, like gold. So what is the difference between something that has almost no weight and something that has huge amounts of weight? And it's this Higgs boson particle. And now that they found it, they'll probably be able to figure out why some things weigh a lot and some things weigh not too much, since everything is basically the same size. Theoretically, everything should be pretty much the same weight, and it's not. So what makes gold? Certainly Higgs boson's in there, and one that has the most force. It's a little unclear. Some people believe, kind of a string theory belief, that a lot of these particles vibrate at different rates, and the way that they vibrate, much like musical instruments, gives them their character, whether it's a big long bass note from a stand-up cello, a trumpet that's a little bit more raspy, or a flute that's a little bit more pure. They all kind of vibrate in a certain way, and that's what gives it its character. Like a two-door or a four-door car, you check the checkbox there, and it makes a difference in what you actually end up with. But the idea is that this may be one of the last big discoveries at the root of our solar system and how everything works, leading to how dark energy works, and maybe finally giving us a unified field theory about how everything works. I didn't bring it up on Monday. I probably should have. I forgot to. We are having markets that move a little bit differently. And, of course, with us hitting a daylight savings time on Sunday, Europe is 2 weeks behind us. So we're going to be finding the markets a little lackadaisical early in the day, because instead of 11:30, we're seeing the European markets close our time at 12:30 Eastern, a full hour behind it. And this runs, I think it's 2 weeks. Maybe it's 3 weeks. I'll have to look back out. But goes into next week also, I believe. And, of course, we get the same thing in the springtime. There's about 2 weeks where it closes an hour earlier before we get to our time change. So the whole thing will work out. But just be noticeable, or noticing that we do see differences in our in what we've got going on out here. So I'm just going to look real quick to see whether or not we've got anything in play before we go any farther. Let's see. There we go. And update my volume, because we want to look at that at pretty much at the beginning of every show, just to see how things are working. Actually, volume's not too bad today. We were coming in to the show yesterday with about 2 billion shares. We're about 300 million farther than that with 2.3 billion shares. We're up 5 points on the S&P cash, a few points from an all-time high, and you would love to see a lot more volume if you were bullish up here, but I suspect that we are in a trading range from about 1545 to 1565 until next Monday or Tuesday. I don't expect us to break out in the next couple of days anytime soon. Amazon did get downgraded today, and what's it trading off? Trading off almost 3%, 2.8% off $7.72 at 266. J.P. Morgan downgraded them, worrying over gross profit. I think it's an easy call to see that everybody's after every single business that Amazon is in. The one thing I can't figure out is if people are still buying online, it's got to be convenience, since they're basically collecting sales tax from everybody now. One of the big reasons for them to exist has gone away. Of course, they've been using all that money to build up their online business and store, now only to start focusing on things like cloud services. Now that they're no longer have a commanding lead on brick and mortar stores, the question is, how long will people continue to order things from Amazon? Of course, there are probably going to be a lot of things that are cheaper, but if you can just go pick it up today at Walmart, does it really matter that much? So specialty things are still doing well. eBay, on the other end, is up. Go ahead and check that out real quick. What do we have? It's up almost 2%. I suspect that there is going to be a little bit of business moving from Amazon to eBay, since there are so many very small sales companies on eBay that set up their stores. A lot harder for big states like California to come after every one of these people shipping products into California. A lot easier for somebody like California to crush them, but at the same time, kind of like cockroaches, there are so many of them, can you just focus on one? I suspect that we're going to see not only the PayPal part of their business doing much better, but eBay also doing much better. And my next story, Henrik Fisker, the electric car company, basically the co-founder and executive chairman, basically resigned last night. Pretty much Fisker is going belly up. Of course, they're up there in, what is it, Norway or Sweden? But yeah, the government in the United States is almost batting 1,000, almost unheard of. They dumped billions and billions of dollars into alternative modes of transportation and energy, and so far one company has made it through. That is Tesla. Basically, since they lost their battery production from A1, Fisker has been in trouble finding a replacement battery that would work as well as what they had. And pretty much circling the drain out here in not even a trifecta. What would you call a perfect game? 300, bowling a 300 out here, at least our government, and being able to throw away huge wads of cash. I think out of the 25 companies so far, 20 or 22 of them are already bankrupt. There were 4 or 5 left. The only one that has been able to pay the money back so far has been Tesla. I don't know if the rest of them are going to go bankrupt, but they do not look good. But government, not a real great way to distribute your money, unless, of course, you're committed to the redistribution of wealth in America, as some people are. But looking through it, there have been 100 electric car companies. In fact, the electric car came out before the actual gas-powered car, a good 3-4 years. Even back then, the first car had a range of about 50 miles. Actually not that bad. And if you were in town, probably not a bad thing to do. They've just never lived up to the gasoline car. Continues to be an issue. JCPenney's bonds today are showing extreme signs of distress. That suggests they don't have much time left to capitalize. I would suspect that you're going to have to see warrants and or stock issued from JCPenney. They are just hemorrhaging too much money. But the bonds are the canary in the coal mine, and probably telling you that there is a great deal of dilution in JCPenney if they can actually even hold up the company at all. So, and we continue looking at eBay was up 2%. I think I already brought that up. Just what can we look at? So, what else do we have going on in the marketplace? We're going to get to stocks here fairly quickly. Again, you can always give me a call at 877-927-6648, 877-927-6648. We'll be glad to take your phone call while I'm getting set up with some new stocks to look at today. Well, how much time we got? Probably not enough time, actually, to get too much in here. So I'll make one more impassioned plea. And that is, it's Thursday, time for a phone call. Give me a ring, 877-927-6648. That's 877-927-6648.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we come back, we're going to look at a few Gartley patterns here that are developing in the marketplace. Again, probably looking at the end of a move here in the next few days, but not looking for this market to roll over quickly. But we will continue to look at some of these Gartley patterns, especially if you're new, if you've not read Tom O'Brien's book, probably the definitive work on looking at Gartley patterns so far. United Therapeutics Corporation's UTHR is the symbol. Nice one. I'd like to see a little bit more symmetry. Again, a lot of this is in the eye of the beholder, and unfortunately, a lot of patterns in the stock market can be a Rorschach test on the chart viewer. One thing you kind of like to see the amount of time from the X to A, the first leg of a Gartley pattern, kind of look close to the other three legs in time. Sometimes the A to B and B to C can get time compressed a little bit more. United Therapeutics is doing a bearish butterfly. It's come up and filled a gap. If we actually look here in a longer time, this thing came down on some significant volume, about 5 million shares, and we are coming back and filling this up. United Therapeutics you basically started off on October 3rd of last year with your X point at 59 bucks. You go down, you have huge volume on the October 25th low of last year at 44.51. And what was that day in there? It's almost 5 million shares the day before the October 25th actual low. So you got a lot of volume back in that low. You got a huge and extended move out here right up, and it's filled the gap. Of course, very light volume, 1.2 million shares. You really haven't had anything that really stands out as a sign of strength since you went through the $59 level. And when you look at those, not a lot to explain a breakout. You had one day with volume here, 1.4 million shares. Didn't even really move that much out here. So one to take a look at there. I'm not much on playing pharmaceuticals or biotechs, but that's it. Saks, another one of these looking, if you want to start looking at Gartley patterns and figuring out how they trade. Kind of interesting out here, this thing, it's not uncommon to get these kind of extended moves in Gartley patterns, and this one actually has a much better proportion to it. If you're watching the charts on Tiger TV, one thing we have in Art of the Charts is the AB to CD ratio. You like to see that pretty much be a 1-to-1. And how does that work? Well, you want to be able to see the same dollar range from the A point to B point as you see in the C point to the D point, price-wise. And if you get that fairly closely, it's termed symmetrical. If you want to look at Saks, it's probably gone just a little higher than you would like. You'd like a 0.78 or 78% retracement of the original move. This one's gone to 89%. So you have to watch it, but very, very light volume opposed to the other ones. It's not uncommon to see Gartley patterns turn anywhere from well, probably 72% all the way up to 90%. In fact, a little bit farther into 90, your odds are that this does go test the $12 mark in Saks. But the one thing I do want to point out here is that the volume in this last C to D leg has been very light, and if you look at my power law vector number that you can see in there, shows that the energy in this C to D leg compared to the X to A leg is off about 30%, maybe 35%. So a weak move back up in here without a lot of strength. You've had some inside days with some volume at 3.8 million shares, but nothing really that jumps out. Basically, when you have a sign of strength, you should get some continuation, and this just went sideways for a number of days. Darden Restaurants, or Darlington, excuse me, International, DAR, another one of these setting up. It is very close. If this thing, you shouldn't go any higher. Your back to the wall is here. Another one of these that had a long meandering move and a couple of days of volume, but nothing that jumps out either here. Darlington International. And what we see here is an X point on October 1st. Your A point comes in on November 8th. B point on December 5th. You get your C point on December 27th. And we're at the D point now, pretty close to the 1802 projection. Should turn around right here if it is a properly Gartley pattern. We'll be back in a minute. Give me a call.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
As we come back, we're going to get back into Gartley patterns. Someone brought it up in the den, so I thought I'd discuss it because I know we've had some phone calls in here. I know some people were wanting to short it. We were actually short DDD systems in the daily newsletter. I've been suspecting that it was going to get back around to the $30 level pre-split. Now that it's split, that area is somewhere around $25. We're actually getting a little bit of strength out here in that we're getting below the last low at $30.28 from February 25th with 15 million shares on about a third of that now. So it's going to probably take a little while for this thing to work out and to consolidate. So you may have 2 or 3 more months before this thing playing around at the levels before things sort out. One of the reasons that we sold it in the long-term Tech Insider newsletter after a healthy gain was the exact same thing that I saw in MCP when it started to take off. And you get to a certain point And then you start seeing the CEO coming out and flogging it on the financial talking head shows. The question is, why are they doing that? It doesn't create any more demand for the actual product. It creates more demand for the stock. And I get extremely nervous when I see that. In MCP, not a bad company. They had a good model. But the CEO got wrapped up in it, and literally he was from about $45 up in MCP. He was out once or twice a week flogging that stock. We've seen a lot of flogging with the heads of 3D Systems. The co-owner basically filing came out, and he sold 500,000 shares at around those highs. And just before it just started its final breakout. But he's been dumping shares since January, and it's very tough to know how these things are going to work. We made some money on it from, what, $65 down to, what was it, 58 on one trade. But you know, the went split, a lot of times these things become fairly unpredictable at post-split, especially when it's not a straight 1 for 2 or 2 for 1 split. And it's kind of interesting that they split it at all. I suspect this has some life in it, but now with a lot more shares of stock in it, probably going to take a while. And again, look for some long consolidations in this. Do not get all fired up to buy it right now. What you want to do is have this stock kind of get extremely boring. And then probably some decent trades off of it. When you look at the prototype for a company that goes ballistic, we're looking at Molycorp now. Let me pull this back. And one of the first things we talked about on this show was Molycorp. I think in May, even before the IPO, I got into it in the $14 range. Do I have, is that 3 years? It can't be. Yeah, I got into it in the $14 range, and when this thing blew up and through about $45, I was out of it. That was the signs right there in that $45 range that it could be that the stock was weak. And what happened? You had a huge run, and let's see if we can get a few more out here. You had a huge run from about $40 all the way up to $79 that came on just very light volume and huge speculation. When this thing started rolling over, then you found out the CEO was also a heavy seller. Not only that, he was kind of cooking the books a little bit as he sold into the marketplace. I don't know what the status of that CEO is. I know he's under or was under an investigation from the SEC. But again, one of those things that you have to keep an eye out for. But eventually, these stocks, if they still have a are what the financial term is an ongoing concern. That means that they're not going to go belly up anytime soon. You will find them come out and normally base out right around $5. The reason is basically no longer shortable below those ranges. And when you look at Molycorp, this thing is going to bounce around here for a while. If it works out, this thing's probably going to be a buy and probably make some decent money at it, maybe even more than the first time. But again, just like on DD, look for these things to consolidate and consolidate for a while. It won't just be over. There's a lot of people that still own these at much higher prices that are dying to get out on any bounce out here. We wanted to look at a few more Gartley patterns and see if we can get into that. There we go. There we go. Cepheid, and let's see, what do we have out here? The CEPHEID, I think it's a pharmaceutical company. CPHD is the symbol on this. Another nice looking doji that came out, not doji, gap down on massive volume that has just filled it. At the same time, it's made a fairly decent Gartley pattern. I would have liked to seen a little bit more retrace in the C point in this. But you have the X point starting on September 25th of last year. Your 8 point is down at the November 15th low. Your B point is on the January 6th high. You only pull back, like I said, 46% of that A to B move. You like it to be about 60, 65%, maybe even 50%, but a light pullback. You have 1 day of strength on the 25th of February, and this thing has drifted up and basically filled the rest of that gap since then. But this is probably about as good as it gets when you're putting one of these Gartley patterns together. A lot of volume down, not much volume up in this C to D leg. BBNC is the another one out here with a bearish butterfly setup. This thing has just a little bit farther to go. Your D target would be $13.91. We got to $13.79 so far today, so we'll have to see how this closes out. But volume not all that bad on this way up. You really want to see a big differential between the X and A and the C to D, and then this one, pretty much the same. So may pull back to the X point breakout, but not a lot in this so far. Let's see what we have here. There we go. Arthur Gallagher and Company. This one is pretty much the definition of butterfly wings. This is a bearish butterfly, and pretty much gone into it and broken up to the target on very light volume. What is it, 62? So we're about, 15 cents higher than the target on this one. And another one where the actual energy on the way up wasn't all that bad, but that suggests that you've probably made the move that you're going to, and you're going to get at least a pullback into the X where it broke out. This one actually did have volume coming up, and through that X point, volume wasn't all that bad. It wasn't that great, but we see another little move in that today of about 75 cents, 50 cents, and that's pretty much the end of it. We've got about 7 minutes to go in this segment, so if you'd like to give me a call, please give me a ring at 877-927-6648. That's 877-927-6648, and we're going to get into some other stuff moving out here. First thing I want to do is get into the NASDAQ and see what's moving in that today on a percentage business basis. Worst performer we talked about was Amazon. Netflix is 2.55%. And I'm watching this almost every day now because this may be one of the big winners. It may take 3 months for this thing to end, but it's going to come back to that 140 level and maybe down to the 100 level, I suspect, which is more likely when the truth of the stock comes out, which is, for me, a issue with, get a little shorter time frame here. Which is that they are not accounting for the cost of all the new production. And, of course, especially the stock really took off when they made a deal with Disney. And, again, still no real idea on how much they paid Disney. They may not be able to make a profit ever. It could be a huge deal for them if they made the right deal. My guess is it's not. If it was, they would have been talking about the terms of the deal, and my guess is that they sold the long term of this company and basically for the short term. I'm watching this one just like DDD and MCP for big sellers inside the company. When we start seeing that, I suspect that that means that they and Icon are probably out of the stock, and at that point we're going to find the reality of a hulk of a company. General Motors ended up being $1,500 per car to the health fund for each worker before it went bankrupt. And I don't think that there's any difference in companies like this. They've mortgaged their future in one way or the other. In this case, on the future price of products when they start shipping them in a couple of years. So, could they continue going on? I think they will, but there's eventually a day when everybody starts recognizing that they are a hollow company They may be absolutely great what they do. You may love their products, and they may not be able to make any kind of money that justifies the super lofty levels that we're seeing in Netflix and companies like Amazon too. Those companies are doing huge gross dollars. They are not raking in huge net dollars, though. And the question is whether or not they'll ever be able to return to that level of profitability. We've got RIM or BlackBerry, as they want to call themselves these days, off 2%. Of course, we are on the verges of Samsung releasing their new phone, if they haven't already. I don't know when that is. Tonight, tomorrow morning? I think it's tonight. So we'll be watching that. A lot of discussion on what Apple is doing and whether or not Apple will be able to continue to compete. Not a lot of reaction in Apple light volume doji out here today. Again, we got to close back below the last high of 435, and what you want to see on that is continue light volume, close back in 435 would make a low in Apple. That we're now starting to see downgrades after the stock has been here makes me think that there are funds, especially funds probably owned by the same guys that are finally downgrading Apple, that might be wanting to buy it. I normally just go counter of whatever these analysts do. If they would have downgraded at $700, maybe I'll listen to them. But if they wait for the thing to come off $300 and then start downgrading the thing, I suspect that they're actually covering for people internally in the company that want to buy this stock. Not saying it's going to go up. I think you have the opportunity for and risk down to 390 if this market rolls over. But I think some people are out there fighting to own some stocks, and those that missed the first run in Apple may be looking for the second run. Other stocks we have out here, all the likely suspects that are super short. We've got Starbucks is off 1.5%. SBUX. If I can type it right, SBUX. There we go. Starbucks has come up to its big gap down. I'll take a little longer look at this thing. This thing gapped down on monstrous volume, and that day was the 27th of April. We saw them come down with 27.5 million, just shy of 27.5 million shares. This one is finally filling that gap, and we've had kind of a decent pullback today. But nothing approaching that kind of volume. We're mostly in the at the high range 7 million shares, low range about 4 million shares right now. So Starbucks looks like it's kind of topped out for us right now. Baidu is another one I've been watching. This thing continues to have additional weakness. A lot of people are kind of a little bit spooked about China, and even though it's down on lighter volume, it hasn't touched that low yet, has it? Thought it had already. Still looking to test that December 6th low, $85.96. So if you're a big Baidu fan out here, you've got, another 27 cents to go, 28 cents, something like that. And as long as you have less than 8.1 million shares, you're okay. And this is one of these ones that has come back on fairly light volume. And so far, you'd have to say that it has found support. And unless this market really decides to dump, probably going to continue to find support in that high $85 region. Let's see what else we have for winners out here today. Sears Holding, the standard stuff, which is it's 50% short. Any decent day and that thing's going to pop. The one that really interests me is Micron. We'll be looking at that when we come back. Please give me a call at 877-927-6648. That's 877-927-6648. On a day where movement is well within the kind of, we have 1560 out here on the S&P.
Are you looking for a precision edge in the market, something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
And we're going to John in New York, and we're going to be talking about Research in Motion, a.k.a. BlackBerry. How you doing today, John?
Good, Dave. Hey, I enjoy listening to you too. You're a lot of fun to listen to.
Well, I hope so. So, what do you want to know about BlackBerry?
Well, I got in at $12.80. What should I do from here?
Sell. I wouldn't have any. I wouldn't. These are one of these stocks that you're basically playing on the short interest. That is on short squeezes. So if I was playing it, I'd be playing it intraday. I wouldn't be waiting overnight, because one day you're going to find out the same thing that you found out in JCPenney, which is they're out of money. They have to liquidate. They have to dilute their stock to get enough cash to continue on, and the thing's just going to get smacked again.
Well, okay, the volume we saw back 4 days ago, that was a short squeeze there?
This stock is a perpetual short squeeze. It's almost 50% short.
But what I was reading there, so a lot of institutions are holding this stock, and
a lot of institutions are hoping, praying to God that they get out of this dog. That's exactly what they're doing. What are they going to do? You know, you got 10 million shares of this piece of crap. What are you going to do? They basically lost their leadership position. They don't have anything. When you look at what Samsung's doing today,
yes,
they don't even own Android, and they're coming up with new things that are better than what RIM has. So the question is what happens, and you'll see huge moves in these highly short stocks. I don't have the data anymore, but there was RIM got down to like $6 and jumped to like $12.
Okay, should I say that, I mean, well, the Z10 you're not impressed with maybe?
The problem is there's not enough mind share and programmers to get involved in this thing. And basically all the programs they have for this are converted from Android and iOS. They made, instead of making and working out a lot of people to develop for this new product, what they did was spend all their developer efforts to make a program that would convert Android and Apple programs to their platform. So they're not native, they weren't written for it, they're slow, some of them work, some of them don't. You always end up with some kind of peripheral company out there that does something interesting. Research in Motion's, if I can put it the best way, reason to exist was they had a secure network. They had the best protection. The president had a BlackBerry for the first 2 or 3 years that he was in office. And the reason why is they had a very secure network. As the other companies and vendors that handled data upgraded the security of their networks also, the reason that RIM did well faded, and then you had Apple come up with a product that ran a lot of applications, not just the few the text ones that everybody was texting back and forth, like Research in Motion did. So you always have to have a proposition of why they exist. And the question with RIM is, you don't have the apps of either Android or Apple. You don't have the backing of somebody like Samsung. There's just not a lot of people that are interested in producing the product. And you see Apple spending or hiring 3,500 engineers just for hardware down in Austin. They're just going to eventually fail. Now the question is, can you make some money on it in the short term? You could in Enron, but I hate these plays because one day you wake up and you find out it's a $5 stock after closing at 15, and it just happens so many times. Every kind of warning is out here for Research in Motion or BlackBerry, so just be very careful about playing it. One day we will wake up. I don't know if it's 6 months or a year from now, but it'll be $5 and been $10 the night before. Okay?
Awesome, buddy.
Okay.
All right, thank you.